Welcome to Chai Pe Kharcha, where we have conversations on personal finance among four NRI professionals working at tech firms. Think of these like water cooler chats you have at the office. Only this time, you will have Ishan, Madhvesh, Rohit, and Siddharth as colleagues you will be listening into. Before we get started, a quick disclaimer. We are not financial experts. The content provided in this podcast is for informational and educational purposes only. Always consult with a qualified financial professional if you need financial advice.
Awesome. All right. Welcome everyone to a fresh new episode of Chai Pe Kharcha. Three important things have happened today. Number one, for the first time, two people are in the same room on this podcast. Second, we also have a bunch of pakoras with the chai. And the third most important thing is Ishan Sethi has shaved his face in a decade. So, talia, talia, talia. A large part of Asia recently celebrated the Lunar New Year, which is also known as the Chinese New Year. So for today's episode, we thought that let's talk about China and see if anyone of us has made significant investments in China. And we had the perfect candidate. Ishan, you recently wrote a blog where you spoke about your investment in Alibaba. For people who might not know, Alibaba is e-commerce giant, which is based out of China. It owns a bunch of brands across Asia, like Lazada, Redmart, AliExpress, and there are like a bunch of different companies that are owned or are subsidiaries of the Alibaba group. It's one of the bellwether companies of the Chinese economy. Ishan, today we would love to hear your thoughts about how you went through the decision of purchasing or investing in the Alibaba stock and what is the current state of your investment, what is the future outlook, and how are you going to continue holding or changing your position in that stock. So with that, over to you. Talk to us about Alibaba. Tell us a little bit about how you came across it and how you decided to invest in it.
So for me, Alibaba became a relevant brand after I moved to Singapore. I started seeing the Alipay option in a lot of places. So Alipay is similar to what Paytm is back home in India, and Alibaba had launched it in China and has expanded that across into different parts of Southeast Asia. It's even there in a few markets in Europe and the US. So the two forms of digital payment that became really popular in China over the last decade were payments through WeChat and Alipay. So that was the first thing that I noticed. And the second reason why Alibaba became relevant was Alibaba acquired a local online grocery store in Singapore called Redmart, which is the one I was using at the time. And I realized that they were going to merge that into a bigger brand they had called Lazada, which was kind of their online shopping space for the Southeast Asia market. That got me interested in getting to know what Alibaba does, how big it really is. And it is massive, right? Redmart, Lazada are very small players, even in their e-commerce space. Tmall and Taobao are huge in China. And they were booming. Jack Ma was becoming a huge public figure in China and globally. His story of going from being a lecturer, bootstrapping some money with his relatives and friends, and then actually launching it. If someone wants to go and listen into it. And it kind of piqued my interest. I had just recently started investing and I decided I'll put, it was one of my first few investments. And I bought Alibaba. I roughly doubled my money when it hit its peak. So I had made decent money at the beginning, which made me feel like I was the best investor in the world. Investing is easy. But then we know what happened with China. China's kind of started to go through a huge dip. The government started interfering with these huge tech companies. Alibaba also, by the way, in this period started going into cloud. The closest thing, if someone does not know Alibaba, is if you know what Amazon does, they are very close to it in terms of everything that they do. They're trying to do whatever Alibaba is doing, whatever Amazon's doing, but do it to a captive audience in China and in Southeast Asia. So What is very strange for me is when I saw that was happening, my immediate assumption was Amazon also at that time, by the way, was booming because all tech stocks were booming in the early 2020s, right? Early 2020, 2021, before the market suddenly went bust. We had a big drop. All tech stocks were moving. So Amazon was going crazy. In my head, I'm thinking the growth opportunity for Amazon obviously is big because they are a global brand and they can capture much more market. But Alibaba already has a captive audience, even if you don't just consider China, right? China already has more than 1 billion people. But you consider all of Southeast Asia, it definitely has the potential of reaching, you know, 500 million people, a billion people. This was my thought process on the growth story for I should keep investing because there will at some point of time, be a rise in Alibaba, which kind of brings it somewhere close to Amazon. I'm not saying it will reach the same market cap as Amazon, but somewhere close. Now, here's the difference between their market cap. Amazon is currently making less revenue, has lower profit margins, has fewer customers than Alibaba does, and they are priced more than Alibaba is. So Amazon has a 1 point something trillion market cap and Alibaba has 180 billion market cap. So there is, in my head, there is a significant mismatch in pricing, right? There is, and obviously this is relative. I'm doing relative comparison between two companies that roughly work in the same areas. Obviously, Amazon Cloud AWS is huge. Alibaba Cloud is only in China, slowly expanding in Asia and the Middle East. The growth is not much, but the market cap should reflect the value of the company, right? How much money it's made. Amazon could go private in 7 or 8 years if they buy back all their shares from the market at current value with just the free cash flow that they're making. At the end of the year, whatever pure cash is left, that's 26 billion projected for this year. If they do that for 6-7 years, they could go private. The multiples are quite low. PE is less than 8. Enterprise value to free cash flow is very low. That all this is where I feel like the company is super undervalued. I'll give you another company in China, which I'm not invested in just for comparison purposes. There's another retailer called JD.com. JD.com made more money, more revenue in the last year than their entire market cap. Now, what market cap means, if the money I'm making should at least be there in my market cap, right? The whatever profit I make, that's my current value of the company based on what revenue flows I see for the next 10 years. If I'm making more money just in year one, that kind of shows how undervalued some of these China stocks are. But this is where the China story comes in. We do not know what is happening in China, right? We don't know. It's not as transparent for investors to know exactly what's going on in the company. There are obviously questions asked on, hey, are the books being cooked? Are these numbers real? What exactly is growth if China goes into recession? And we know that they've had a huge bankruptcy there of one of the biggest real estate developers, which is expected to impact the overall economy. If all of that starts happening, will the spend potential of these customers be the same? Maybe not. But my point is, even if we expect everything to go down by half, the company is still undervalued.
True.
The only question is, when does the market catch up to all of this? Sometimes the market can see there's a dissonance in stock price and what the reality is for very long periods of time. So then do I stay invested for that long period of time, or is there a better utilization of my capital? That is the big question that I have. I don't have a perfect answer on whether I will stay invested or not in Singapore till I don't need this capital to invest somewhere else, or I find a big opportunity that I can invest in. I'm not making as big a loss as I was a while back because I averaged out some months ago. So because at that time it had gone, like the stock price right now 70, it had gone down below 70 and I averaged point. There is hope. If the Chinese government intervenes, they try and stabilize the economy. They put in some cash injection into the economy. Companies, again, spending power comes back. Somebody started making more revenue. If all of that happened, that's the near-term capital catalyst that might prop the stocks up again, bring them to fair value. If that doesn't happen, or if the market still doesn't react positively to it, that might be a trigger for me to say, look, at least in the near term, there isn't a huge scope for the stock to go up because the market clearly doesn't trust them. Then maybe there are other things to look at, other things to invest in. That's my story.
So, in summary, essentially the investment thesis that you're proposing for an Alibaba or maybe even a JD.com is look at their revenues, look at their cash flows, look at peer companies which are maybe listed in a US or something, and look at the kind of valuations that they are commanding. And then just based on that comparison, it is very easy to make a conclusion that these companies are super undervalued and they're just basically going through, let's say, more of a sentiment crisis than an actual business crisis. There are obviously certain headwinds that are coming out of China, which are impacting these sentiments. But these companies continue to remain healthy, at least on paper. Of course, there are doubts as to how much of those paper numbers can be trusted. It looks like these companies are well worth the effort and the money that you have put into it, and hopefully it pays off. I think, like, one thing that I have learned in my investment journey is you can take the best decision possible with the information available at that. किसी को नहीं पता फ्यूचर में क्या होने वाला है, नहीं जाएगा, कोई वॉरेन बफे भी आके नहीं बता सकता। But the idea is that with the information available, it seems like this is a good investment and you take a leap of faith. Investment is, that's how
Yeah.
I think about my.
Yeah, and so you summarized that really well. I just want to add that while my growth thesis comes from the fact that there is a difference in relative valuation between these large other e-com players versus say an Alibaba. Even if I purely look at the company, again, assuming all the numbers are correct, and it passes the eye test because being here in Asia and talking to friends who do buy stuff in China, it is huge. So, I mean, they are making money. Now, profitability might be a question, margins might be a question, but the money is there. It is big enough to be valued better. So even if I'm purely doing a simple valuation based on the discounted cash flow method, it should definitely be about $120. Like, definitely. Based on those calculations, it should be around $120. So it is significantly discounted from that. So there is potential purely, even if it doesn't catch up to the Amazon valuation in terms of the multiples there, it is discounted. Now, again, questions to be asked on whether they can sustain this performance, whether margins sustain, whether revenue sustain, whether the numbers are right. We trust China less in terms of their reporting versus companies in America because the reporting requirements there are quite strict. Sorry, Madhvesh.
Yeah, my counter thesis is that there are opportunities abound across the world in terms of stock market investing. Every market has its pros and cons. I agree that Amazon and Alibaba have very similar businesses. The difference could be in terms of the average revenue per user. A user in the US is going to have much more buying power than what a user in China has to. So I agree that Alibaba might be undervalued. It might go up a few notches, but not anywhere close to Amazon. It's just because people see a lot of potential from US economy and the average revenue. So what do you think about that? The other thing as well, one of the philosophies that I have in my investing is गिरने वाला चाकू को कभी मत पकड़ो. Wait till the inflection point comes. When the story turns around, that is when you have to actually try to push the chaku up. So what do you think about these two things?
No, that's very fair. So the philosophy is strong. The implementation obviously doesn't work every time. So when I bought Alibaba, my initial investment did double at one point in time. Looking back at life during lockdown, these e-commerce companies were the only way people were getting their stuff. That is why their valuations went crazy. Now, being a China-based company, the dollar value of that revenue per customer is lower, but the benefit you have in China is your volume game is much higher, right? And again, this is not purely China. This is multiple other countries as well. If I compare purely on how much money each company is making, trusting the numbers, Alibaba is making close to, I'm looking at Yahoo Finance. The trailing 12-month revenue for Alibaba was $927 billion. I'm comparing that to Amazon. Their revenue for trailing 12 months is 574. So Amazon is making less money right now. Amazon is less profitable right now. Amazon, if you look at their profit margins also, the margin on every dollar that they're making in terms of profit is lower than Alibaba's. And Alibaba's actually improved those margins the last few quarters because they had also, again, when obviously the market went down, the spending went down. everyone went through margin issues, which is why layoffs happened. We've been here, we've seen Lazada layoffs happen in Singapore as well. Again, assuming the numbers are right, Alibaba's books look stronger than Amazon's right now. Right? There'll be a lot of people who say they're not directly comparable, but given how complex these businesses are, they're not a single type of company. It's not doing just one thing. They're conglomerates doing multiple things. Even if I take the big three things, their payments business, that was another big catalyst coming for Alibaba at the time. That Ant Financial was going to do an IPO. They're the biggest shareholders in that. They'll get a whole bunch of cash out of it. They didn't do it then. And now the market's down. They don't want to do it at this point. Look at cloud. Again, there are going to be huge players in cloud globally. But locally, they could be huge players in cloud because China also is restrictive in terms of foreigners coming in. So at least locally, they'll have a large share of the market. And again, China, it's as a captive market by volume alone is humongous. And then their e-commerce business, which is still very strong, still running. Growth is low in both these sectors. So that is one thing that I learned from the last earnings report. Their growth for e-commerce, I think, was 2%. And for cloud was just 3%. So that is very low, which is why I said I understand the stock price not jumping up. What I don't understand is the stock price is already so undervalued. It should at least come close to fair value, right? I'm not saying you need to have a 40, 50% growth in stock price based on the earnings report. The growth story is not really well known right now, but the valuation itself is not great. I mean, Amazon could acquire all of Alibaba without blinking an eye. That is how small it is in comparison right now, which makes you wonder. Alibaba is obviously also focusing a lot on international expansion, which is again Southeast Asia. They could go into other markets as well. That business is not profitable at the moment. So it again depends on how they manage their profits. But if they can make that business profitable, that business is growing at about 40% per year. So that is significant growth coming from one segment. The other thing that they could do is there are other businesses that are not profitable, that are not core businesses to them. They could simply sell them off. So if that happens, A, you get the cash inflow. And B, if you did that, it could also help you with the loss making that was happening with these businesses goes off your P&L. So you're no longer making that loss. That could be useful again for Alibaba to kind of recover. Not going to say revenue per customer will become same as Amazon, but I think if they focus on their core business areas and grow those, that could itself, with the volumes that they have, bring profitability even higher.
That's some great in-depth analysis, Ishan. And I would say like any rational investor hearing this would really want to just go and buy Alibaba stuff.
If you look at these companies, the third biggest not third biggest, but the big three e-com players in China are JD, Pinduoduo, and Alibaba. Pinduoduo has been doing fantastic. Like their stock has gone up, just like all the other stocks have gone up in the last few months in the market's been turning. JD and Alibaba for some reason have been going down the other way. JD is understandable because JD's margins aren't that great. Alibaba is the one I think is suffering more from reputational crisis or sentiment crisis, like Rose said, more than anything else. Like purely on numbers, it kind of looks like there's something not adding up here. Either the market knows something that I don't, or the market is not seeing something that I am seeing. Let's hope I'm right in this.
Yeah, the only thing this reminds me of from my investing experience is that worst thing is the story needs to be good for the stock to go up. But the most important thing is how many people are actually buying your stock. I think in Alibaba's case, the second one could be at play here. So yeah, let's see how things turn.
सर मेरा एक सवाल है बड़ा आप लोग you guys are more sophisticated and I'll ask a very simple 10 question to you. जब आपने अलीबाबा लिया था तो आपने सोचा था कि मैं I'll at some point in time sell it and book profit? Yeah, you had thought, yeah, I believe in the company and I'll keep holding it until I believe that the company. So it's a two-part question. First is what was your mindset when you bought it? And second, why are you thinking about anything on Alibaba now? What's that inflection point that is causing you to rethink?
So I am not a buy and hold forever investor. I want to be upfront because there are very few companies that over a long period of time will have that hold forever quality in them. There are a few. You can look at Warren Buffett's portfolio for which those few are. But even Buffett's portfolio has a lot of churn, right? And he's the biggest buy and hold investor, but he does have significant churn. He buys into certain stocks, he exits certain positions, he doesn't hold for it. So my thought process was that there is like this is going to grow for a while. The e-commerce, like the digital revolution has started with the lockdown happening. People are getting more comfortable with this. So this is going to go for the next decade. I am okay holding it for the next decade. But there is always a check that you need to do after a certain point that the company is still growing the way it is. And there is still potential in that company. Now with Alibaba, it's been 4 years that I've been holding the company. It's not reached a point where I have to sell. But that story is what I'm questioning right now. So, जैसे मद्रेश ने कहा, is your story and are people buying that story? I feel like my story is stronger now than it was when I bought it. The company is making more money now than it was back then. Growth potential might stagnate to a point, but they have a lot of cash. They could start paying out dividends. They could start buying back stock. They are buying back stock, which could help boost the stock price. But unless growth starts coming back into the company significantly, that story that I had initially has changed. And now it's basically, does the valuation catch up to what the company's making? And if at some point the valuation does catch up, unless something has changed, some catalyst is on the horizon, I exit the company. So not a hold forever, but if I'm buying 5 years to 10 years is a perfectly acceptable horizon. If the company suddenly shoots up, which again, Alibaba had 2x, I could have sold at that time saying I've made my money 6-8 months, easy to get out of it. But at that time, in the back of my head, the thought process was that there is still growth. This could go on, which didn't work out. So right now, it's when the valuation catches up, if there is no growth catalyst, then I exit.
So is it fair to say that you are evaluating it now as part of your regular, maybe annual evaluation of your stocks?
Yeah.
Has come out.
It's not an annual thing. It's whenever they announce results. What is the story now that they're trying to tell? What has changed? Is there a new problem, a new bottleneck coming in? Is there a new catalyst coming in? What's the guidance that management is giving? Because that drives changes in market value. What is the growth factor going to be? What are revenues looking like? Has something significantly lowered or increased? So as of now, there wasn't anything in that call which was a huge cause of concern or anything to celebrate. I think the revenue was okay. EPS missed the headline numbers, but not by much. So it was pretty much in line. As long as they're able to keep doing this or improve on some of the margins, or the buyback program becomes more aggressive, then the market also starts feeling that there's something. The one thing that had given me some hope leading up to the earnings was reports that insiders were buying the stock. Jack Ma and his holding family company was purchasing a lot of stock, which always gives you confidence. They obviously know more than you do. If they are buying the stock, clearly something is happening that you don't know. So good time to stay invested in this. But it hasn't really moved the stock price as much. So I'm a little disappointed with the size of the buyback program they have. So buyback program, for anyone who's listening who may not know, the company itself is repurchasing their shares from the open market. What that does is when the company repurchases the shares, your number of shares out there in the market decreases. Therefore, when you're calculating stock price, your stock price is market cap by number of stocks. If your number of stocks are decreasing, the denominator goes down. So hopefully your stock price goes up. It's going to remove 3 or 4% of their shares. They could have done more, is the point. So if they reduce a significant number of shares from the market, a company should do a buyback when the stock is undervalued, because they are buying back at a price when it's profitable to buy back. They know the stock price will go up later. Like that time they can issue more stock. So just like we buy at low prices, they also should buy at low prices. And that gives the market confidence. It's the question of how big that program is. If it was a significant program, it was like $100 billion, then the market immediately wakes up and says, okay, something is happening. These guys are putting in a lot of money. So they have a lot of confidence that this is happening. All companies have done this, by the way. Meta's done a huge buyback program. Google's done a huge buyback program. They issue shares every year to employees. So their buyback has to offset the dilution that they're doing by issuing new shares. I'm sure Alibaba also has a similar program, but it's not as big as the Google, Facebook programs are. That is another thing that to look forward.
I quickly want to mention Nothing that we discuss on this podcast should be considered as investment advice or recommendations. This is about us sharing our experiences, how we have dealt with. Awesome. Thank you so much, Ishan, for sharing your investment thesis. There's a saying that conviction is what makes money in the stock markets. This is a great example of that. Hopefully, everyone who listened to this episode today learned something and will be able to use it for their own investment decisions. That's it for today, everyone. Thank you for listening. We'll be back soon with another episode of Chai Pe Kharcha.